Welcome to Agoracom Small Cap Best of the Best. I'm George Cholas, founder of Agoracom, and with us today again, our chief market commentator, Alan Barry Laboucan. Alan, say hello.
Hello, everybody. We got it's the 1 year anniversary since we started the show. We got a great show for you today.
All right, and we're going to talk about that first because it was a year ago today when Alan and I first started putting our money where our mouth is, because the month before that, we had been at the Vancouver Resource Investment Conference in Vancouver, naturally, and we saw decimation. Him and I were on the floor saying, this is just too much, and if we're not going to stand up for the small cap space, and who's going to? Because if you weren't a buyer last year, then you're just never going to be a buyer in your life. So in order to put that into perspective here, let's take a look at the chart for the TSX Venture over the last year, and I brought it up there. Alan, you can see that?
Not yet. There it is. Yep.
All right. So this is a year chart. So pretty much right here, you can see my cursor going right to the left. This is where Alan and I started making our picks right here and pounding the table. And it's important to remember that the index itself is up about 14%. But we've been able to do substantially better than that because the index includes all the zombies and the dormant companies that Alan's been telling everyone to stay away from.
And you know, that George, was the biggest theme of what we were talking about this time last year, was how I sort of try to put companies in different type of buckets. Back then I was seeing a lot of companies that were zombies. They had really no project, no money, no prospects, the kind of companies that are walking dead. I said stay away from those completely.
Or sell them and take your tax loss and be done with it.
Exactly. There was another bucket of companies that sometimes those companies would have a good project and no money, or no project and money. But what they were doing, instead of trying to move forward with their projects, they were really going into a dormant mode where they were just trying to hunker down and do nothing other than preserve what cash they had. And I didn't have much hope for those companies really either. I mean, it's not like they're imminent to be a zombie, but they definitely weren't going to do anything for the shareholders.
Maybe even worse, because you could be stuck in those for years just based on a little bit of hope. At least a zombie, you can cut your losses, move on, and say it's over with. It's almost those dormant companies that are more dangerous because you figure there's hope, and they can sit like there for 2-3 years.
Exactly.
I want to show that
the favorite one that we were always looking for was the leadership group, and I'm going to give you a couple examples here, George. This one is one of the leaders. I'm just going to screen share there. Now here's Primero, and Primero is a company that does a lot of great things. And look at this company's action. Trading down around 444, has traded as high as what are you looking at here? $8 and $9.04. That's 100% gainer, and we picked this company really early before this move. You look at a company like Premier Gold, PG, on the Toronto Exchange. Look at this chart, George. Started last year, they were trading at about $1.74. Now trading at $3, or as high as $3 and almost $3.50, I would say, right there.
And you've been banging the table on Premier Gold all the way through $1.40, $1.70, $2. You just
picked them a bunch of times.
Right.
And that's what we wanted. That's what the show was supposed to all be about, was finding these leaders that can do this kind of performance. Now, what I'm really excited about, George, in this last year is, I've been in this business since '93, and during that time, I've seen a lot of shenanigans in the market, and a lot of times you would see that even good companies often would sometimes not get the attention because they didn't really have a promotional type of management. And often, companies that had really nothing but a lot of hot air would get the funding. And so that really makes the actual business of mineral exploration and development, it hampers it because money is not efficiently going towards the companies that actually can use it and do something good with it in the ground, and it's going to chase the hot money of a stock promotion. What I've really noticed over the last year, George, is a real separating of the cream is really rising to the top. Before we started the show today, George was just going over some of the past picks, and I've been really delinquent. I have to do a project of going back and looking at all of our picks and where we picked them, but nonetheless, practically every company George mentioned of ones that I had done that in the past of our picks was up significantly. It's gotten me so excited about what's going on in the business, George, that for the last 10 years or so, I've been basically doing my Allen Berry reports with a little bit of consulting on the side to some publicly traded companies, giving them advice on strategic planning, branding, digital marketing, communications, that sort of stuff. And I'm ready to throw my hat in the ring, and I'm about to start being very active in the management of a couple of publicly traded companies, one in diamonds and one in gold. And the reason that I'm doing that, George, is just because I think that this is the best market that I've ever seen in this space for companies that are serious about mineral exploration and development.
And that's the only place the money's going. That's the only place the money's going now. There's no more paper money out there.
Exactly.
Let's take a look at, because we got a bit ahead of ourselves. I want to take a look at something here because we got a little bit ahead of ourselves to talk about what you and I were able to do over this last year.
Yes.
Before we dive into details, but we started here, we banged the table, and look at this massive first run that we got right into October. I mean that was unbelievable. And then you and I started talking about the fact that things move really far, really fast.
Yeah.
Take some money off the table. Take some. We didn't say liquidate everything you got, but take some money off the table.
Yeah.
We got this happen again, which is natural, right? Because this first run is the kind of a relief run where people say, "Oh, it's my chance to get out now." And so we anticipated this, and then right here, you and I made an announcement. We said this is part two. We said to everyone, if you miss 7-Eleven right here, then this is part two, and even better because of the tax losses that were going to take place from the companies that have been suffered all of 2013. So this is where you and I put together our stock picking contest. And we specifically said that the contest was going to end on January 31st, which is right here, this line, the end of January. And look at that move again. So this isn't just Alan and I happen to get lucky with some picks here and there. Everybody can get lucky once in a while, but we called this, and then we really called the hell out of this and said, this is, and you got to do it. So we've had now, this has been a natural move here, right? We've had some bumps and grinds. The good companies are doing all right.
George, if you go back to that October move when it kind of had got a little toppy, at that time we were banging the table about taking some profits. It's nothing wrong with taking profits because we had some really spectacular moves from July until then.
A lot of our picks are up 100%.
Right.
It's unbelievable what happened. So even though the index was up about 12, 13%, we have picks are up 50, 70, 80, 100%.
Yeah. And then I said, and then it ran its course, and then we started talking in December about the similarities that were developing between the July low, 7-Eleven low, and where we were in late December, and that's when we initiated our contest. These aren't fluky picks. These are a combination of fundamentals, which I'm very keen on. I also wear the hat of a technical analyst as well, and George really wears the hat of a technical analyst, and that's why if you combine those two, that's the kind of results that you can get and why we can make those picks.
And for those of you who don't know, who weren't with us back in December, again, going back to this move here, we picked 6 stocks each. 11 of the 12 were up. The average, our combined averages were 40% increase. Alan had 47, I had 33. The only loser was mine. It was Avalon, and that was down just 6%. So it's not as if we got those numbers by having huge beta where we made 200% in one and lost 50% in the other, and the kind of roller coaster ride no one can take. They were just solid returns. So Alan, now here's the big question. Okay, here we are a year later. All right, so past performance has nothing to do with the future. Here we are a year later. Okay, so we've you know, you can pretty much call this, you know, this 100-day. I guess this must be the 100-day, but or the 200-day actually. You can call this about the middle point, right? So we're a little ahead of it right now, but we are going to the summer. July, August can be slow. I love this time of the year to be able to reload. Obviously, we did it last year, so we want to reload. Here's what I see happening over the next year, and I want you to give me your 2 cents for everybody at home, and then we'll go to some picks. Okay. I was at the Vancouver Investment Conference in June, and I think I mentioned this in the last show, so I'll keep it brief. What I saw was the decimation and re-emergence of the industry. So 2013 was decimation. It was a funeral. This year was the post, you know, the post, I guess the postpartum depression, or maybe that's not the best example, but the point is that
it's pretty good, George.
There are only 55 companies that were there. That was it. So what that told me was all the zombie and dormant companies have thrown in the towel. And that's fantastic, because that means they're not promoting, they're not doing IR, they're not going to the street trying to raise money. They're just out. They've all gone zombie, and they may emerge one day. You know, these guys, they all do someday. But in the meantime, we got a small bucket of companies that are actually active. And I would say 55 were at that conference. Let's say there are another 100 or so, maybe. So there are 150 small caps on the venture and the CSE, maybe 200. They're actually worthy. And that means a lot fewer companies where the money is going to flow into. And the money is going to flow into them. This is a guarantee, because it's happened decade after decade. You can't have a stock market without small caps. We're not just talking about junior miners. We're talking about tech, you know, guns and butter kind of bricks and mortar places, even some biopharmaceuticals. And I think what we're going to see is, as long as we don't have a macro event, the one caution I have is, hey, you don't know what's going to happen in the U.S. and around the world. And big things happen there, all bets are off. I wouldn't have to talk about 2008 if that's just the case. But otherwise, I expect this trend like this to come back maybe a little here during the summer months, and I expect this to be here, you know, come next year at some point. I expect this to be substantially higher on the backs of fewer companies. So that's why I'm even more excited this year, I think, than I was about last year. What are your thoughts?
Well, there's a couple things converging on what I think will cause this year to be very good for a select group of companies, George. Again, you know, I go back to the fundamentals of supply and demand for many commodities. There's been a chronic, almost 3-decade. There was some relief for exploration and new mine development back around 2005 to, let's say, 2009-10. But in the last 3 decades, most of that 3 decades has been underinvestment in exploration, underdevelopment, which has weakened the supply chain. If you look at gold, for example, back about 10 years ago, your average head grade was much higher than it is today. For example, the average deposit was in around the 3 gram per ton range. Now you're looking at an average in the business of about 1 gram per ton. You know, we're going deeper and deeper for lower grades. There's a lot of need for new discoveries, and that's one of the problems that I used to have in the inefficiency of the market, George, that it used to chase after these stocks, and then the money of the projects that actually needed it wouldn't get done because a lot of the serious mining guys, exploration guys, just aren't really that promotional, right? They're more focused on finding stuff in the ground than trying to promote the heck out of their stock. So the market was really inefficient, and I'm seeing a real shift in the last couple of years where the zombies and the dormants that used to be the where you'd find those stock promoters has really been decimated. And I'm happy for that. It means that the business is going to get more efficient at allocating capital into the projects that actually need it, and not need it because to keep it alive. Need it because these are the potential new mines of the future, and we need those mines. Right now, the average cost of production's going up. I'm back to a situation that I never thought I'd see in the business again, where we called it the lost generation in the 80s and 90s, where there just wasn't enough prospects for good jobs, so students weren't going into university to understand geosciences. I'm seeing lately, I was just talking at the golf course the other day to a mining engineer who's now getting out of the business because he just has no work. So our supply chains are weak, our exploration chains are weak, the people are weak. This is what the foundation for an explosive move in commodities is.
And on that point, Alan, I want to show everybody this, okay? Because again, what I love is you talk about the fundamentals, and I can show it in a visual graphical form. But these are the weekly charts. So these go back about 3-4 years of gold, silver, platinum, copper, and palladium. Okay. Take a look at gold. 1 bounce, 2 bounce. Now starting to make a bit of a recovery here. We'll still see if that's going to hold true, because you're going to have this wedging formation happen. I think gold's on its way up for the reasons you're talking about. Let's take a look at silver. 1 bounce, 2 bounce. And notice all these takeoffs are in 2014. So now silver has had a third. All right, so again, we're going to have a wedge here. We're going to have this, we're going to have this, and we'll see where silver goes, but it's playing right into your hand so far. Take a look at platinum. Back in 2012 low, back in 2014, now starting to make its move.
Yeah. I love that chart, by the way.
Copper kept on getting weaker, now making a really powerful move. I mean, that is a powerful move in 2014. There's a reason, and I think Alan's hit these on the head, that you've just got supply chain issues, and values are starting to go up, and that's going to translate into the prices of a lot of the companies that Alan covers on the resources side. And finally, palladium. Palladium pretty much couldn't get out of this whole channel here for a couple of years, but there it is again, 2014, and look at that move. So I think Alan has hit it dead on nails, and I just wanted to make sure everyone gets a visual of that as well. And these are just the beginning here. I think these moves are just the beginning stages.
Yeah, and so the long-term story of supply and demand for the key commodities that we pick stocks for are very bullish. Now, I start looking at the industry of exploration, and again, I'm really seeing that change from the chasing after stocks and more efficiently putting the money into quality companies. And that's my wheelhouse. That's why we've been able to do so significantly better than the exchange, is because the exchange is weighted down with those dormant and zombies. And so, even though the good companies are moving strongly, they're being pulled back by all those junky stocks. And the exchange, if it was just an exchange, in fact, we should probably do an Agoracom exchange index.
7-Eleven index.
If you look at that index, I guess I'm part of the reason why we haven't done that yet. But I will make a point of it. We'll do an index. And what you're going to find in that index is a significant outperformance. And I think that's the key to the future, George, is that I think that TSX index, the venture, will continue to move up, but it's pulled back by those dormant and zombies. Whereas you look at let's call it the Agoracom index, I think you're going to see another 10 to 15% move for the venture, but another year where we find a lot of these 100% movers, 50% gainers in short periods of time. You know, 12 companies in a 6-week period that do an average of 40%. You know, that's the kind of action that I think is going to go. So I have never been as excited about this business as I am now, George, because I just think that the money is much more efficient at finding quality, and that's what I've always been about in my reports. I've always been focused on quality, and so I'm so excited. And like I've said a couple times now, you know, that's why, George, I'm throwing my hat back into the running of public companies because I just think there's an environment going forward for many years. I don't think those zombies and those dormants, George, I don't think what the inefficiencies of the market that used to make those attract money is ever going to come back again.
No, you know, no, it will. And you know what will happen? It will. 7, 8 years from now it will. Because what will happen is when things fix themselves and all these great companies start pulling everything forward, but they've gotten too expensive, that's what's going to happen, right, Alan? You're going to see companies trading today at 25 cents. That 6, 7 years from now could be at $2, $3, $5. We saw with Arizona Star Mining. I've mentioned that a couple of times to everybody. But that is the quintessential example. 25-cent stock during the dot-com days. Nobody wanted to touch it. 8 years later, it got sold for $17.25. So my point is, once the great companies take off, what always happens is the paper speculators and these guys are going to start saying, hey, you can't buy Allen Silver Company anymore because it's at $6, but look what I got for you at 10 cents. And it will happen because that's human nature. The difference is, you know, people should be smarter by watching us and be able to recognize and not put big bets on those things. You want to play them for a 3-day trade? You do it. Play the game. Why not? But we know that you know, those are never going to be winners. There's only one way to pick winners. This is our way.
I appreciate what you're saying there, George, and I think, you know, what you're saying is that when hot money comes in, that they won't be as efficient with their money. But
of course, they get sloppy.
I'll give you an example, George, of why that gets difficult. You know, I've been following a lot of uranium projects over the years, right? And I've picked a lot of winners, and Fission is the current one of the premier discovery companies out there, right? And I think are going to be a takeover target. But the problem with other companies trying to jump on that bandwagon, which is very similar to what you're saying about the hot money, the problem is the hot money jumps on what looks like they think is the next fission. The problem is that they can't compare to the results of the fission, so the promotion ends very, very quickly.
Yes, but when Fission, if and when it does get bought out, $3, $4 a share, it makes its move, in comes a couple of guys say, well, we're the next Fission. We got all this land here in the Athabasca Basin, and we're only trading at 10, 15 cents. Put all your money into us, and that's what they do, and people get sucked into that, right? I play those promos sometime, but I'll buy them at 12 cents. I'm out at 17 cents because I don't sit there and say this is going to be the next Fission. But anyways, it'll happen. Let's go into some of the picks, and because we've taken a long time on the macro side, what I'm going to ask Alan is that we just go through them a little quicker than we do. Just bam, bam, 45 seconds to each one, so we don't turn it into a monster show. But here's some of the picks that Alan's talked about. Let me put it on screen share here so everyone can see them. Drum roll, please. And here we are, okay? So you can see the screen, Alan?
Let me see here, George. I was just, yep.
All right. So first up, so we talked about the Venture Exchange. Let's talk about that again. Klondex Mines, KDX on the TSX, $2 a share, does 225. So you talk about a company doing almost $500,000 a day in volume. I like that. Give me the 45 seconds on Klondex.
Okay, I'm going to get to the screen share. So this isn't the first time we've picked Klondex. I like this company a lot. I really like what they're doing now in Nevada. They just had some news out that I'm really excited about. They announced that they were doing a $10 million bought deal financing, and the next day they increased that 50% to $15 million bought deal financing. Obviously, I love when the big money, smarter money is chasing after something like this, and the reason that they are is because what they're doing down in Nevada is very exciting. Look at the performance of this one over the last year, George, and this just goes back to what we've been saying. Look for quality, folks. This stock was trading at about $1.20 at the low, traded as high as, what do we got here, 225. And I think that after this basing sort of, profit-taking period, that we're ready for another strong move for this company. I'm a big fan of Klondex.
Technically speaking, looks fine to me. I'm not saying I'd run out and buy it tomorrow, but if Alan says fundamentally, and I'm going to end it off with this: $15 million bought deal. That's $15 million guaranteed to come to the table. They've done their research. Who am I to doubt them? You've got to think that Klondex is a great long-term hold.
You got it.
Okay. Next up here, if you can see my screen, Alan, right?
Yep.
Next up, a favorite of mine, one of your picks back in the day. I bought it at 60 cents, sold it a little bit later for a smaller profit. Dalradian, DNA, 98 cents. We first picked it at 60. Let me be accurate. You first picked it at 60. I concurred with it. Now at 98. And you can see from my right hand, can you see my smaller chart here on the right-hand side, Alan?
Yep.
All right, so this is where Alan first picked it a long time ago in the 60-cent range, right here. And look where we are now. So, Alan, where's this going and why?
Here's another one, George, another quality project they've got in Northern Ireland for gold. And this company just, again, another one with a big bought deal financing, George. I really like what I see when I see these companies with these big bought deal financings. In this case, I think it's about $20 million bought deal financing. Look at this stock chart.
And Alan, is that straight equity or is there flow through in there?
No, straight equity. They're in Ireland.
That's very important because I hate flow through because you know it's going to come back on you 4 months later.
In Ireland, it's there's no flow through.
All right.
Yeah. So look at this chart, George. Higher highs, higher lows, higher lows, higher lows.
I can't see your chart, just so you know. I don't think you got on screen share.
Oh, okay. Let me get it on. Oh, I didn't. Here we go. So with Dalradian, yeah, we're.
There we go.
Oh, is that it there, George? Can you see it now?
Nope, I'm looking at your TSX Venture Index.
What the heck? Okay, here, I know what I did wrong.
You're still on Stock Watch.
Yeah, I know. I this technology thing gets me sometimes, George. I pick the wrong thing to push the button on. Now you can see DNA, right?
Yep.
So here, look at these higher lows, higher lows. You know how much I love stocks that make higher lows and higher highs. This is a classic bullish trend. We picked it, actually, I think we picked it back here originally, George. I think you picked it here and took a position in it and made a little bit of money. Then it came back down. But since December, look at the performance of this one. And it's a very good project again, George. In Northern Ireland, got a lot of really good drill results. The big money has done their homework, and they're throwing a lot of money into this one, George.
All right. Next up here, let's move over to Paramount Gold, PZG. TSX dollar rate does about 100. Let's see here. Paramount Gold does about 20,000 shares a day. So you know I'm not thrilled with that kind of average volume.
Oh, don't forget, George, they also trade down in the States. This is the one that gets you all the time.
That's right. That's right. That's where all the volume is being done, actually. So you got a ton of volume. I'm liking it here. I'm just going to make a quick point from a technical point of view because you know they were below their 50-day, I see this convergence right here. You can see in the corner, and now it's finally popped over that. So that to me makes me a little bit bullish, and I wouldn't mind taking a position here and at least making a move for the 200-day moving average at $1.20, especially because I have the comfort of knowing that you know the fundamentals and they're powerful.
Yeah, they've got really good projects, George. I'm very impressed with the projects, but what really got me excited about picking it today was this thing's gone through a triple bottom here. You look at the bottom in early May. You look at the bottom in early June. You look at the bottom here recently, and it's always nice when you see that third bottom a little bit higher than the second bottom. And now I think now we're starting to get over those 20s, over the 50. The MACD is starting to look a lot stronger. This is a quality company that's been oversold over the last few months, and I'm really bullish on this one, George.
I don't have anything new to add, Alan. What you showed me between the triple bottom and what I said there, what I showed there, how it's breaking out over its moving average, short-term move, it's 50-day. Makes me bullish. Makes me want to ride it up to $1.25 if I can. And I would set a stop loss below that last triple bottom point there. So let's say, for argument's sake, I just set it at 89 cents. If it got below that, it's turned against me. But otherwise, I'm really liking where it's at right now. Next up, let me pop this open, is Primero. So this is your P day because you got Paramount, Premier, and now Primero. It sounds like an Italian name, but $8.89. This baby trades 870,000 shares. So they're talking about $7 million a day in volume. This is a monster company as far as the kind of things that we cover. So tell them about Primero and why you're making the pick today.
Well, actually, Primero and PG were more examples, George. Remember of what I said about the kind of why you want to look for these kind of stocks. Primero, I see. So you look at this, George. It started a year ago, was trading at around 440. Look at it, traded all the way up to almost $9 here. This is just a wonderful looking chart. Now, the reason that I'm a little reluctant to say buy it again today is because it's been on a pretty good move. I think around $8.40-ish is a good entry point. I think this is a long-term, somebody who's looking for a little less risk because these guys are a producer. They're a producer with a nice pipeline. Look for any weakness in this in the price. I think if you can get it down around 840, you're looking pretty good right now. So I like Primero as an example of looking for quality over stock promotion.
Oh, you're going to love this. This is one of the few times we disagree where you want to wait and I want to go in. I'm liking this chart right now for several reasons. First of all, it's broken through all of its moving averages. Okay, here we are. And what's more importantly is the high back here on this day, okay, was 885. The close was 875. Well, Friday, it closed at 889. So it's broken through that last peak.
I think that's an all-time high too, by the way, George.
So you talk about a double break. I mean, it's broken through its moving averages. I love that, and it's broken through its last peak. I'm a buyer with a tight stop. So I put a tight stop of 865 or something like that. But I think we get a chance to move here, and I think this is gold inspired because gold has made its comeback.
Yeah, definitely.
Got way oversold, and people who are looking forward on gold saying we got to be in Primero. So that's where I end my analysis there. But I'm definitely buying. I'm a buyer at that range.
So I like that, George, because you're a short. You think there's a short-term trade in here, and I think that this is a core holding kind of company. So usually when we converge on those, it's a good situation. I'd do your homework on that one, folks.
This is an all-time high here. I mean, all-time high, and I don't like to trade all-time highs, but based on what you told me fundamentally, I'm liking it. I make that with the tight trading, with the tight stop.
You bet.
Next up is a couple that I'm putting on watch list. I'm not making any buy calls here, but the first one is Synapsis Therapeutics. All right, so I'm going to bring that up. You can see my screen. This is this
symbol again, George.
So you can see the symbol is CTH, Charlie Toronto Harry. CTH. This is a company that's got solutions, that's working towards big solutions in the Parkinson's space.
Disease, yeah, and I just, as you told me about this one, George, I noticed in the news that they had just got some new funding from the Michael J. Fox Foundation.
And that is everything to me, because what that tells me is this isn't just another company saying, yeah, we think we can solve something. And I think they can based on results and early. But when you got someone like the Michael J. Fox Foundation, if for most of you probably know this, but reiterate, Michael J. Fox, successful actor, we all know from Back to the Future, has been, has suffered major setbacks due to the onset of Parkinson's for him. And what he's done, he's appeared in front of Congress, he's taken the lead for the Parkinson's community, and
he's a champion for the cause.
Right, right. So you got to imagine that group has to be the top of the charts as far as credibility and knowledge and understanding what needs to be done. So when they grant money to Synapsys for not the first time but the second time, see, that's what's even more important, because the first time, you never know. People can get things wrong. And I think the first time they gave them about $900,000. This last time, I think it was $500,000. Excuse me, because I can't remember the press release. I just saw the headline there. But the second one means that these guys are dead set certain about Synapsys and what it could do. It's not a guarantee that they're going to solve major problems in Parkinson's, but when a Michael J. Fox Foundation gives them a second shot, a second injection of money, I cannot argue with those people. That's impossible. Take a look at this chart over here. All right, they had a really great run. Okay, sorry, this is a 5-year chart. I'm sorry, I'm going to go back to the 1-year chart. So they had a really great run here. Okay, they, look at this move that they made. Got ahead of itself for sure. That happens with all companies. All right, they came back to zero. I got to go back in our records. Remember if I made a pick of this back when it was in the 48s. I can't remember if I did or not.
I don't think you might have on Twitter, George. I don't think you did on our show.
All right, all right. But nonetheless, it's recovered off of this. This is where the Sting, the traders, and everyone. This happens in small cap space all the time. I think this basing action over the last month has told me things have stabilized, and I expect to see Synapsys higher through here. And look at the convergence of all 3 moving averages. If you can't see them here, look up here. 69 is the 200-day average, 64 is the 9-day, 60 is the 5-day. They're all right here, tightly wound like a spring. It breaks through the 200 at 69, I think it's off to the races. So what I do is I'll take a half position here, set a downside of 60 cents, because that's the 50-day moving average. I want to see it support that. If it breaks out over 72, 73, however, I buy the other half quickly, and then I set the 200-day moving average as my stop loss and ride this thing right back up. I think there's a chance here to make 100% in the next 3-4 months. But to make a 30-40 pointer, I'm going to get pretty aggressive on this one. I have no vested interest. By the way, we should mention that for all new people. We always disclose any conflict. So if we're working for a company, or if we have ownership of any shares of those companies, and I'm not working for any of these companies, and I don't have share positions in any of these.
Nor do I.
Yeah. No. So this is just us trying to teach you what we're learning. We'll say it again now. Don't go out and buy stuff because we're buying it, because our situations are vastly different from yours. You may be Bill Gates, or you may be someone who's living paycheck to paycheck, and you've got to consult financial advisors and your spouse and everybody else. So make sure you do that. But I'm loving that there.
I'll tell you a few things that I like about your chart there, George. One is you look prior to 2014 starting. And if you look at the vast majority of days are red days and very few green days mixed in there. You flip the switch on 2014 and all of a sudden you've got many more green days than red days. And I like the looks of that. That means to me that there's sort of a new enthusiasm for the company. There's new blood coming into the stock. And then you go to what you said about the convergence of the moving averages. If I get a convergence of the moving averages on a stock, it's because those are the inflection points, and you always want to look at those inflection points and say, well, what's the chances of this going down dramatically or up dramatically? And then you look at the fundamentals of what George was talking about. The Michael J. Fox, the need for Parkinson's. It's becoming a much bigger disease that needs help. the fact that they're getting funding from the company that, or from the foundation, Michael J. Fox Foundation, I think is a very good sign. And then also another indicator that I look in a converging sign is I look at what's happened the last couple months prior to that. And George, you've seen it. It's got an upwards bias on its sideways action.
Yeah,
That always
absolutely.
tells me that it's the breakout is likely to be to the upside, not to the downside. So I really like this pick you've made, George, and I just learned about this company earlier today. And by the way, now that I looked at the symbol again, I remember you talking about this on Twitter.
Okay, all right, so that's where it was. And by the way, I'm at Agoracom. Alan's at Alan B Report. So Twitter's another great way to follow what we have to say.
Yep.
UWE, I'm putting on watch list right now. This is U38 Corp, uranium company, properties in South America. Pretty interesting company to me. I'm making this strictly a technical call because it's always had great long-term support here in the 8.5, 8 cent range. It's always had, and we're back down there again. Okay, so you've seen that it's been, up here in the 15s, up there in the 13s. Then we are back in over 15. Recently, early this year, way over 20. So it's down 2/3 now. When you look at this peak here, all right. So the high here was 24 cents, and now it's sitting at 9, and it was at 8, 8.5 just a few days ago. That's 2/3 off on a very active company, a lot of volume, a lot of interest. That's a technical buy for me. Now, I wouldn't buy this unless it's got an 8 in front of it, because I'm buying it for a trade. So either get an 8 or 8.5 cents. But I think you buy it at 8 and 8.5, and you hold through September, October, November. All the things being equal, I think you make a nice 30 points on this, with 40% on this with very little difficulty.
This one I'm not as excited about as CTH, George, but I will say one thing. Look at their MACD. That gets me interested.
Take a look at that right now. Yep, increasing MACD. That's I guess I could feel that too, but you're right. So momentum is definitely starting slowly creeping up, and I think that that's definitely worth a look. So I'd be patient. Only if this is September, October, I might be a little more aggressive. But we're going into July, August, and I don't expect a lot to happen. So you can probably sit back and wait for your price.
Got it.
Last one that I want to talk about is Zenyatta. We've talked about Zenyatta a lot on this show.
Yes.
We've picked it. We've picked it a few times. We really like this thing. People I trust who understand this stuff think this is a potential monster winner. That's for the long term. The reason I'm picking it is take a look at what's happened to it just in the last couple of months. Here we are at a high, in the 350s. And we made it back down to 2. Now, here's what's awesome. Here's why finding this. I mean, take a look. There's a 6-month chart. That's even more telling of what's going on. Okay, but what's happening is Cliffs Natural Resources owns about 5 million shares of the company, and insider trading reports show that Cliffs is now in the process of disposing of this position. Hey, these big companies, billion-dollar companies like Cliffs, they don't sell a few shares. They want out. They want out, all right? Because at the end of the day, 5 million shares at $2-3 is $15 million. If they thought, if it's not that they're negative on it, but they're having big corporate problems. They have a proxy battle for their board. People trying to take control of it.
That point, George, I often think that people in the mining business, they don't understand that in this case, a Cliffs selling is not an indication of the poor quality project. It's more of a corporate issue that Cliffs needs money, and they've got to look for assets that they have that they can sell. $15 million here is more important to them in the short term than trying to, because I do think that this one has the potential of being a future mine. So why wouldn't you want to hold? But they're in a financial position where they need that help. Sorry for interrupting.
Yeah, no, that's perfect. I'm glad you reiterated that, because it's not a reflection of Zenyatta, but they're getting attacked from all ends at the corporate level there at Cliffs. So I have to assume that they're divesting themselves of all non-core things. Someone has swooped in there and said, get rid of everything that isn't core to us. I don't care what it is, because I want all of our companies focused on what we do and only what we do. So this has become a buying opportunity. Not yet. Let me finish here. I'll finish pointing out, then you come flying in. It's not what. Here's what I'm looking for. I'm looking to see a major cross in the market. What that means is, I'm pretty sure, and there's no, Alan, you and I both know this, that when this kind of situation happens, the selling target, in this case Zenyatta, is most likely looking to find a buyer that can take 1 million or 2 or 3 million shares of Cliff shares out in one shot, because they don't want Cliffs constantly selling into everything every time there's a small jump in the stock. If and when you see that cross, buy it the same day, because it means all the selling pressure is gone and it can finally have a chance to move again. So remain patient. I wouldn't be buying it yet. Look for the cross or $1.80, one of the two. If it gets to $1.80, that's too much to give up. Look for a cross or $1.80, and then you fly into Zenyatta. What were you going to say? Go ahead.
Actually, I'll give you another thing to look at here, George. You look where my crosshair is right now. I think that Cliffs probably started selling right around the 16th of June. 16th to 18th of June.
Sounds about right, because I think it was around early mid-June that you start seeing trading reports, filings. Because Cliffs has such a big position, they're mandated, they have to announce any of their sales. So that's when people start seeing it.
Right. So I think that actually, they've had a fair bit of time there to blow off a fair amount of their stock. I think what you'll see, George, is that this volume will dry up, because this is relentless selling, right? This isn't like, you're waiting for it to pop and then you sell some more. You waited for it to pop, you sell some more.
No, they're not just in 10 or 15 cents. They're just selling. They just got sell orders in, sell, get out of it as fast as possible. We don't care.
So you'll probably see this negative volume die right around the time when and then I think you're ready for a breakout. I actually like what I see here, George. Look at this low back in January. We're now higher than that low, and it doesn't want to seem to break below that low. So I think what you've got here is a line in the sand where those that understand the long-term prospects of this company are getting in there and saying, no, we're not going lower than this price. You guys want to sell it on a fire sale price, we'll buy it.
Yep, and Cliffs is happy to say, write it off, away we go. Trust me, these big companies, whether if they have already sold a couple million and they got 3 million left, they're selling for $1 less. They don't want to lose that 3 million, but it's more important for them to get out, because someone at the top, I know these companies operate, someone at the top is screaming at a trader saying, are we still holding on to Zenyatta? I want out of that. I want all the cash. And they're doing that for other assets, little projects, joint ventures. I'm sure they're doing it for a lot of things out there. So that's a great opportunity. That's going to be free money if and when we make that call. And I'll post it to Twitter. You'll put it on the Daily Show, but away we go. So that pretty much wraps up there. We don't want to go too far because we've had a lot to say today. I'm done with that unless you got something more to finish with.
No, I like the fundamental story of Zenyatta. I've talked about it a bunch, and like George says, once those guys are done selling, I think the stock is off to the races again.
All right. Thanks to everyone for tuning in. Sorry, I'll get rid of my, let me say goodbye personally there, so we're not, here we are. Thanks to everyone for tuning in. Second week in a row we've had our show, so we're back on track after a little bit of conflict with schedules and all that the last 3-4 weeks. And we'll see you again next week, guaranteed. And tune in and make sure you help spread the word.
Yeah, I wanted to reiterate, it's been an exciting year over this last year, even though George forgot to get me a present for our anniversary. I'll give him a big kiss out there to George.
Happy anniversary.
We are definitely, we've had a lot of good picks over the last year, and I'm really proud that I think the greatest thing that's come out of this is that the people in our audience are becoming a lot better investors. George has seen it himself as a trader. He's improved as being a trader simply because he's added that element of now he's only trading the stocks that basically we talk about. So they've got that good, strong fundamental story with them, and then you top on that good, strong technical analysis, and you create an opportunity where you can be a better investor. So whether you're a fundamental investor that looks for quality, or you use the fundamentals and the technicals, I'm confident to say that our show has been successful in helping people to do that, and that's what I'm most excited about. Because when I first started my newsletter back in 2005, my whole goal was to try to help those that were reading my reports to become better investors. And if you can say that for someone who's like George, who's had a lot of experience, I can probably say that over 50% of our audience can say the same thing. So I'm really proud of what we've done over the last year, and we're going to keep doing that in the coming year.
Keep the email coming, folks. You sent some great email in the last few weeks, and we really appreciate it. Have a great weekend. Watch Alan on the front page of Agoracom Monday and every day for concise, smaller shows about the best press releases of the day. See you next week.
Have a good one, everybody.